Hello, everyone, and welcome to the panel, Institutional Investors in Digital Assets, What Early Adopters Have Learned, presented by HashKey Group. Today, we're going to be delving into the lessons learned by first movers in the digital assets industry. My name is Walter Jennings, CEO of Asia Insight Circle, a Hong Kong-based network of CEOs and directors. We're glad to have you. With us today, we have an exciting group of panelists with experience and expertise in digital assets, regulation, investment, and wealth management. I'll begin by introducing Frank Tong, Managing Partner of QBN Capital. Frank is former Global Head of Innovation and Strategic Investment at HSBC. Today, QBN is a tech-focused fund working to scale up companies through investment, mentoring, and networking. Also on the panel is Angelina Kwan, COO and Chief Risk Officer at the HashKey Group, where she leads operation and risk management. She has extensive experience through Asia Pacific and the United States in business development, restructuring, regulatory compliance, as well as investor and stakeholder relations. Michel Lee is Executive President of HashKey Group, where he leads their global operations. Michel has over 25 years of international investment banking experience, including capital raising and M&A transactions. And last but not least, we have joining us from Singapore, Aaron Low, CEO of Lumique. Lumique is a solution platform for wealth and investment advisors. Aaron has 20 plus years of investment strategy, wealth management experience gained in Singapore, Hong Kong, and the United States. A great panel of investment experts able to talk about digital assets. Angelina, beyond Bitcoin, what other digital assets are out there and what are the opportunities for institutional investors?
Thank you, Walter. We are really on the cusp of change now, and this is the most exciting time to get into digital assets and into investing with digital assets because there's more and more choice that's coming out there. So first you started with the Satoshi Nakamoto protocol of Bitcoin, and they were the forerunners. And then you saw the evolution of other chains coming out, such as Ethereum, Bitcoin Cash, and so on and so forth, that were based off of the original protocols. But what you're seeing now is a new and exciting world of decentralized finance, where additional coins now, or tokens, have been issued by companies, by protocols, by foundations that are actually eclipsing what was original protocols that came out in the early 2000s. So it's an exciting world that is now even moving further out from just these companies to central bank digital currencies. So you're seeing now governments moving into the digital asset space and actually issuing central bank digital currency. And you're seeing testing in certain countries. You're seeing governments now working together in terms of forming joint ventures to actually offer what we call CBDC. So what you'll see going forward, though, is even more different types of digital currencies coming out, and keeping up with those protocols is going to be very challenging for everyone.
So, Frank, we talk about digital currencies, and I'm questioning a lot of what QBN invests in is financial industry infrastructure. Are we ready today for digital assets?
Well, Walter, thank you for the questions. I don't think we are ready. When QBN looked into digital assets, we start raising the questions. The question is, what if Hong Kong to be remaining as the global financial center 10 or 20 years from today? Can we just leave out the entire digital assets area? So if you look at that, we look into a few elements that we need to do. First, we think that we need digital ID, and also you talk about the CBDC has to be pushed out by the government in a way. And the most important part will be coming to the commercial element that is defined by the financial framework, by the regulators. Now, we are talking about the banking infrastructures, we're talking about the exchange infrastructures, and we also talk about the talents that are required to support all these infrastructures. So, for instance, we talk about the banking, then we talk about the perhaps the CBDC, coin, the token issuance, the life cycle management. We talk about the custody, we talk about payment, we talk about settlement and remittance and so on and so forth. And also to talk about the central security depository. So all these functions, are we ready, being mapped out from the traditional world to the new digital world, are we ready to move that? And the same thing applies to the exchange. For example, the S2 exchange, and this is a centralized exchange. What about the decentralized exchange Angelina talks about? So all these things are we ready? And if we're not ready, by when we're going to be ready? So.
I want to ask the same question to Aaron Lowe. Aaron, you work with wealth and investment managers. How are they moving into digital assets, and what are their attitudes towards digital assets today?
Well, Walter, I would say, in a word, cautiously optimistic. Many are imagining how to build out infrastructure, research, and process that could review and incorporate digital asset portfolios. It's not quite yet consensus where they fit in traditional asset classifications, whether they're in the alternate space or in the mainstream. So institutional investors are more likely to outsource actual selection to hedge funds and PEs who are first movers in that space, and just focus on asset allocation and not security selection. And for the asset managers, they tend to incorporate these, if they do, into their tactical allocations and not yet strategic allocations. And banks tend to move into these assets, if they do, via satellites and not their core allocations. So in a sense, we're getting that, family offices, growth investors, and some of the Western investors are much more open to understanding and innovate, China families too, in this space. But certainly, they will likely to be the first mover into that space compared with value investors, for example. So you can kind of imagine how late Warren Buffett was getting into technology and even the dot-com space.
Michel, what is the advice that you give institutions who are kind of today wanting to get into this space but aren't quite sure what to do first?
It's a very fast-moving space. There's a lot of development happening. You really need to stay very close to the technology development that's coming through. We, HashKey Group, as a group, have been investing in this space since 2015. One of the early investors into the area. We really very much focus on the technologies. That's where we started, really understanding who are the smartest people, who has the best teams. And a lot of these are affiliated with universities, with some of the smartest scientific institutions globally. Really understanding the angle that they are coming at and the innovation that they're bringing into the technology and the space. So that's still a lot of things going on in that area at the moment. And we're seeing a lot of the basic infrastructure really growing up. Really, people even 12 months ago were saying, well, some of these infrastructures are very slow, not ready for real-world adoption. But it's actually happening. I mean, as Angelina mentioned, the DeFi space, some of that technology has really surged tremendously, the performance, et cetera. I think the best way is really staying with people who are in the space, who actually do the work, understand technology, understand financial infrastructure. The second area that we're really focusing on is regulations. Because if you look at digital asset, ultimately, just like money, just like stocks and bonds, we've seen it in history. There were always a new technology come out, people get overly excited, and things get overhyped. And they're always bad players because the rules are not established. It's really understanding and the regulations, making sure that you are dealing with people who are reputable, who actually is transparent on what they're doing. That is tremendously important. And we've seen this. I remember my grandmother told me, never invest in stocks because they're just pieces of paper. Just like what I was told recently, digital asset was just a signal in the computer. So those are the very fundamental issues we're dealing with. Because the stock market, we've seen this probably 50 years ago, and there's a lot of bad actors And you have regulators coming in, adding transparency to the market. And the same is happening in this space. So I would think really go with people who understand technology, who understand regulations and what it means for disclosure and transparency, and really looking for the longer term. I think as an investor, I kind of believe it myself, and I've started putting my very small nest egg, at least have a little bit exposure so you have an understanding of what's going on. Because just like internet, this is going to change the way we live. So yeah, you better learn about it.
As a third-party investor, how important is regulation in this industry, in digital assets?
Extremely important. Different jurisdictions have its different rules and regulations, and often operating of digital assets required to comply to these rules. So without the understanding of rules and regulations, it would be suicidal.
We've been talking a lot about the confidence in the future of digital assets and crypto, but what are some of the challenges that remain, particularly for the institutional investors?
Yeah, I think I've been a very traditional financial person, a finance person. I've spent most of my career in an investment bank. I thought I was innovative. I was in charge of delivering of a lot of new products and services in the IPO space, in the derivative space over years. But I think people within finance really work within a certain framework. They look at the world in a certain way. And I think most of us are not really appreciating the depth of change that's happening in the technology and how the technologists that's building a lot of the new infrastructure is going to disrupt the old way of doing things. I think for the financial professional, a lot of it is being open-minded and really most of us are very focused on the immediate tasks. I think there's a lack of understanding of what are the fundamentals of a stock and a bond and a security. Trading, how does it work? Because a lot of the stuff that the world or the ways of doing things as we know it is going to change because of these new technological innovation. So I think Hong Kong, that's a big challenge. We're a great financial center, but we do not have the necessary technical expertise, and we got to learn from our counterparts in China, in the US, and the best technologists out there with the best ideas. We need to be very open-minded.
I want to turn to Aaron Lowe for a moment and ask Aaron, we spoke earlier about some of the barriers to adoption of digital assets, and what are you finding amongst private wealth and investment advisors in terms of their barriers? Is it their own viewpoints? Is it the clients?
Well, the key challenges are typically fully understanding the nature of these assets, the risk appetite, naturally, transparency, and maturity. The first movers from investment advisors tends to be in the consulting space and I would say family offices rather than the middle income, the mass affluent. And the young tends to be a little bit more understanding of these kind of assets. Naturally, aggressive private wealth and technology PEs were one of the first investors here. And again, one of the other barriers would be more focused on the newer kinds of digital assets. The market needs to find more grounding on the robustness of the investment process that has to shape these kind of risk exposures. And again, very few institutional advisors can accept white paper business models. You can see that the progression from concept papers to prototypes to actual business models that have revenue streams tends to be the way to go. And the big difference between now and in the 90s, where we face this new technological avalanche of .coms, is that the investors now are much more concentrated with technological entrepreneurs, the likes of Jeff Bezos and Mark Zuckerberg. Many of these very, very highly rich individuals with family offices to run. I mean, they have a much better understanding of that digital space than many other investors. And because they control much of the wealth, they tend to be one of the earlier movers in that space as well.
Angelina, I want to ask you a slightly technical question. Can you walk us through the interplay between blockchain solutions and an exchange, and what's the relationship and how do they work together?
Wow. In terms of an exchange, it's a meeting place where different buyers and sellers can come together to buy and sell a digital asset or stock. The blockchain solutions basically are providing the underlay for this exchange. The exchange will function off of the blockchain because, for example, when you want to buy and sell Bitcoin, you're going to basically tell Michel that you want to sell the Bitcoin. He will then put it on the exchange, and the Bitcoin will move from one owner to another owner on the blockchain, and it's immutable, and everything is actually recorded on the blockchain. And that's what's so revolutionary about it, because it's doing it in nanoseconds. And it's the speed, it's the accuracy. This is what blockchain has brought us now. That's why you're seeing exchanges move towards blockchain solutions.
Great. Michel.
Yeah, I think historically, if you want to create an asset, you need to have verification that the asset actually exists.
Yep.
Then you have lawyers, you have accountant, you have a lot of paperwork. Everyone put the stamp, it's a reputation on the line. That's how you create a stock and a bond. That's historically how it's done. Now, blockchain is the technology that allows people to share all this data and store it in a distributed way that can't be changed, is immutable. And that is a very much more efficient way of digitalizing assets or creating asset that becomes tradable. Ultimately, an asset is only of value if there's verification. And there are people who can point to this and say this exists, and that's the disclosure. So this is all part and parcel of our daily economic life. We live on a lot of contracts, and having those contracts in the digital blockchain form allow us to interact and exchange these assets. So that's how I look at it.
Frank.
I'll give you an example, right? For example, over the counter, we do the fund buy and sell, right? So, using over the counter issue. So if you look at the fund, there are fund managers, there are fund service providers, and there's a fund distributors, and also the fund regulators. So all these things could be coming from one company or coming from many, many companies, right? So in the old days, or in the traditional days, what we are practicing, we are a whole bunch of people. They call transfer agents. They also do a lot of bookkeeping, reconciliation, and so on and so forth. When you do buying, and someone has to do the bookkeeping, and at the end of the day, okay, Frank buys so many, and Frank sells so many. Now, if you're using blockchain, as just Michel and also Angelina explained, this blockchain has built-in contracts. It's built in all the immutable features. So once you do going through the blockchain platform, you're done. Basically, you're done. So you get rid of all these big issues of the so-called central security depository issues on the bookkeeping and reconciliation. So suddenly, you really lower down the cost, speed up the efficiency, and voila.
Fantastic. Thank you very much. Well, I want to, on behalf of the HashKey Group, thank everyone for joining us. Aaron joining us in Singapore, here in the studio, Frank Tong, Angelina Kwan, Michel Lee. It's been a great conversation, and we'd encourage you, if you're still interested in the subject, please come visit us at hashkeygroup.com and look for more on this panel. Thank you.
And Walter, thank you for being a fantastic MC today and our moderator today. So thank you very much.
It's a new skill set, learning to host a virtual platform, a virtual workshop. So thank you, everyone, for tuning in.
Thank you.
Thank you.
Cheers.